I want to make sure that we have. Okay, we are recording this, if just in case you're concerned about that. But I want to welcome everyone today. I'm Diane Story, the program chair for the South Carolina HFMA. Really excited to introduce our speaker today, Tiffany Frank. Tiffany is the Vice President of Government Reimbursement Team at Meduit. She leads the national team in delivering quality and excellence in niche net revenue areas, including Medicare bad debt recovery. She has spent her career in healthcare, both nationally recognized professional service firms and as an RN at a large academic medical center. Tiffany received a BS in nursing from Rush University in Chicago and a BS in business with concentration in accounting and finance from Indiana State University's Kelley School of Business. She is a licensed registered nurse in the state of Illinois. So we're going to make this pretty informal today. If you have any questions, just go ahead and raise your hand. We'll be monitoring the chat and monitoring people's conversation and making the dialogue pretty open and free. So I'd like to thank Tiffany and welcome her to the presentation. Thanks, everybody.
Thank you so much. And I'm super excited to be here. Kristen, you can hear me okay?
I can.
Awesome. So we're going to keep everybody, you have the ability to unmute yourself. Obviously, we'd ask you to stay muted unless you have a question, but I want this to be as interactive as you all want. So feel free to put questions in the in the Q&A box. Kristen's going to monitor that. Or just, interrupt me. More than happy to stop and answer questions. Again, I want this to be as informal and as interactive as possible. Again, I'm Tiffany Frank. I'm the Vice President of Operations for our government reimbursement team at Meduit. I do, as stated, lead that national team responsible for our Medicare bad debt and our Medicare Advantage bad debt recovery services. And in the past couple of years, we've actually gotten into the uncompensated care and S10 reporting space as well. We've really spent some time building out that module in our software based on the needs of our clients with, as I'm sure you all know, Medicare bad debt and S10 reporting going hand in hand. And it's just getting more and more complicated to report both of those items on your Medicare cost report. I've spent the last 10 years playing in the Medicare bad debt space. I love it. And I've spent my entire career consulting hospitals and health systems and did a little stint as an RN as well. And I do keep my license active. So today I'm going to talk about a few things: growing patient financial responsibility, particularly for Medicare and Advantage beneficiaries. So again, why is Medicare bad debt important? I want to try to convince you of why it's important. Talk about some industry changes impacting Medicare bad debt. Look at some strategies to increase Medicare bad debt net revenue recovery and collections. And then I'll really probably spend the balance of our time talking about regulatory and audit considerations in Medicare bad debt. It's just our passion to ensure that our clients or that providers across the country claim the maximum amount they can in Medicare bad debt, but then make sure that that amount that they claim in Medicare bad debt makes it through audit. And my hope is that at the end, you'll be able to recognize the different causes for the connectivity gaps that could exist between Medicare reimbursement owed to hospitals versus actual Medicare reimbursement claimed on cost reports. Identify these changing Medicare bad debt regulations. We're going to go into a lot of detail about those and just how the regulators' interpretations of these regulations are impacting the compilation of Medicare bad debt logs and audits across the country. And then, hopefully you'll be able to respond to some of these Medicare bad debt industry changes at your own organization with proactive future planning, relating to Medicare bad debt and, other areas like S10 uncompensated care of the cost report. So I'd like to start by level setting on just how important Medicare bad debt can be to a hospital's bottom line. You can see the numbers up here on the screen, but in 2022, Medicare spending grew 5.9% to $944.3 billion. That is 21% of our country's national health expenditure. And then as of March of 2023, there were about 66 million people. There were about 66 million people enrolled in the Medicare program. Just over 50% of these folks are in traditional Medicare, with the rest being enrolled in Medicare Advantage plans. So that's an important statistic to just keep in mind. I'll touch on that a little bit more, but that Medicare Advantage population, I'm sure you've seen it in your own hospital, it is growing, and the government plans to continue to grow that. So around $30 billion a year come in the form of Medicare payments due from patients in the form of these deductible and coinsurance. So $30 billion a year in deductible and coinsurance amounts. And how we see this, many patients are still unable to pay this portion of their hospital bill. So, CMS, the government said, okay, we understand that. We're going to keep hospitals incentivized to serve these Medicare patients. So we're going to allow you to claim that Medicare bad debt on your cost report and reimburse you at 65 cents on the dollar. So of that 30 billion, around $3 billion is paid to hospitals for Medicare bad debt each year. So around 10% of those owed deductible and coinsurance amounts are claimed as, Medicare bad debt annually. Interestingly, while Medicare is increasing, that number is actually trending down year over year. So hospitals are claiming less in Medicare bad debt. There's a lot of reasons for this, including that growth in Medicare Advantage, which I just talked about. But in our experience with doing, hundreds of cost reporting years across 250-ish, client facilities, we're in 31 states. We have found that on average, that 10% is underreported by at least 6 to 7%. Which is owed reimbursement due from the government to providers that, is being left on the table. So, we found just over the course of doing this for the last 10 years that there's specific reasons why these gaps exist in Medicare bad debt reimbursement, the amounts that should be claimed versus the amounts that are actually, already claimed. So I'm going to share that with you today, talk about that a lot. Before I get into that, though, I want to spend a few minutes walking through the South Carolina specific Medicare numbers. Then I'm going to touch just a minute on the growing Medicare Advantage population that I was kind of just talking about. So here are your specific numbers relating to South Carolina. So this is traditional, just traditional Medicare. So and this is the last 7 years. The 2023 cost reporting numbers are still coming in. So we don't have a full picture yet of what 2023 looks like. But if you look at 16 through 22, up there in the top right corner, you can see that there's been $2.5 billion in Medicare deductible and coinsurance amounts over the last 6 years for South Carolina. Of these amounts, 366 million have been claimed as Medicare bad debt. So on average for the state, hospitals claim about 14.5% of your Medicare deductible and coinsurance amounts as bad debt. Of these claimed amounts, and you can kind of see this in the bottom half of that graphic up there, you can see that about 42% of the claimed Medicare bad debt in the state of California comes in the form of crossovers. So those are your Medicare primaries, your Medicaid secondaries. And then the rest, 58%, are in those non-crossover categories. So financially indigent, self-pay agency, those type of categories. So as you look at your own hospital statistics, I think it's really helpful to look at these averages. If your hospital claimed rate is far less than that 14.5% state average, or your crossovers versus your non-crossovers percentages vary significantly from the state average, you may want to consider that there could be some of that additional reimbursement being left on the table. So let me talk just a few minutes about Medicare Advantage. So I spoke earlier, Medicare Advantage, or, quote unquote, non-traditional Medicare programs, they are increasing year over year. And it's the government's plan to continue that trend. I just saw a directive come through a couple weeks ago with the plans to really try to get as many traditional Medicare patients filtering into those Medicare Advantage programs. But from a Medicare contracting perspective, because of that, there really are reimbursement considerations that should be factored into those type of contract negotiations with these Advantage providers. And like I said, it's, I always have my Medicare bad debt hat on. It's really important that Medicare bad debt be considered when negotiating these type of contracts. It can be considered, on the front end with ensuring that your Advantage payments are getting, reimbursed over that traditional PPS rate to factor in this Medicare, this bad debt benefit from a traditional Medicare perspective. Or Medicare bad debt can be handled on the back end like we do for, Medicare traditional. And there are payers that do allow for bad debt to be filed. And we have found a lot of benefit for our clients in this area. Excuse me, I have to take a drink. Now, the contract terms of these Medicare Advantage payers, they vary by payer, and often they're very provider specific. They can even sometimes differ depending on, by health system, depending on the different providers in the health system. And the language varies by the contract as well. There are really like three areas. Some contracts have explicit language stating the provider's ability to file an Advantage bad debt log. Some of the contracts specifically exclude being able to file a bad debt log, and then a lot of contracts are just silent on the treatment of bad debt. So it's really important, as a reimbursement professional, to understand each of your Medicare Advantage contracts and which of these scenarios they fall into, so you can ensure you're maximizing your potential reimbursement. If you do have contracts that allow for bad debt to be filed, those should be being taken advantage of. And in our experience, for the contracts that do allow for bad debt, the reimbursement rates are very similar to traditional Medicare bad debt rates. They're usually 65%. Some of them are 70%. I mean, we have some that are even 100%. They typically also do allow providers to, quote unquote, look back on previous years, often subject to a 50% penalty for the logs being filed timely, but they are able to be filed. So if you find that you have a contract that does allow for Medicare bad debt to be filed and you have not done that historically, you do generally, again, depending on the contract, but a lot of the contracts that we've reviewed across the country, you do have the ability to go back and kind of capture that value on historical periods. Again, often subject to a 50% penalty, but it can still be a pretty significant reimbursement. All right, no questions so far? Everybody good on that, Kristen?
Yep, as far as I can tell.
Okay, taking another drink. Sometimes it's dry up here in Chicago. Okay, switching gears. Back to our gaps in Medicare bad debt reimbursement. As I'm sure you've seen in your own day-to-day job functions, there are just many reasons why revenue could be missed as it relates to Medicare bad debt. It's really, in our experience, usually never due to one area, and it's never because hospital teams aren't doing a good job. It's just healthcare, and healthcare is ever changing, right? And there's just a number of items that result in these connectivity gaps that mean lost revenue. So I've listed out 6 there. I can give specific examples of each one in a ton of detail on just different gaps that these create. Things like new staffing. You might have new staffing in the billing office, and maybe there's just a gap in the way that the certain staff was trained, and the next thing they're using a different code to code Medicare bad debt, let's say agency accounts or crossover accounts. Then, if you don't know about those codes, or if you don't know about, that gap in training that business office staff received, there can be revenue missed. Changing processes, any sort of changing processes that affect Medicare bad debt. Changing processes in your early out, if you change early out vendors, or if you change the way you handle your self-pay statements. Any changes in your agency policies. If you go from a primary to a secondary, or you phase out one of your primaries for, a different primary, or phase out, your secondary altogether, all of that kind of stuff, if not really factored into the overall Medicare bad debt process, can create gaps. Affiliations and mergers are huge. Divesting hospitals, bringing hospitals in. Oftentimes hospitals that get brought in, they might be on different systems. How do you handle legacy system conversions and make sure that you're still capturing that bad debt that might be coming in still from, agency? System conversions and upgrades is a big one. We see a lot of our clients doing upgrades to Epic, or, some of our Meditech shops, we see a lot of upgrades from, a client server or a Magic platform coming onto the Expanse, the updated Expanse platform for Meditech. If Medicare bad debt doesn't have a seat at the table during, those system upgrades or those system conversions, it can create a very large potential gap relating to Medicare bad debt. So it's just imperative that the Medicare bad debt processes, the transaction codes, and all that goes into when you all do system upgrades really gets considered. Changes to agency policies and procedures is a really, really big one, or really just any sort of policies and procedures. Financial assistance policy being one of the biggest ones. Often, financial assistance policies get updated at the business office side. And if there's changes to those financial assistance policies that, reimbursement folks don't know, or those change those changes affect the way that you all are reporting your Medicare bad debts, there can be gaps there as well. Same with billing and collection policies. Again, any sort of changes to those policies that could affect the way that Medicare accounts flow through ultimately to your bad debt log can be impacted. And then the last one I left off, but that's one of the biggest areas in recent years is these new regulations. And that's really where I want to spend most of our remaining time today. These new or changing regulations that impact Medicare bad debt. And we're just seeing more and more of these regulatory updates in the Medicare bad debt space. And I say it all the time, really staying on top of this can be a full-time job. And you all wear many hats, so it is hard to stay on top of this. For example, and I'm sure you all are aware of this, but there's a new reporting template out now in place for both Medicare bad debt logs and S10 logs. And the template is great, but it does require additional fields to be submitted on the logs. And some of these new fields they're complicated to pull in traditional reporting environments. And so again, there can be gaps created there, or potential gaps that could be created, in the audit process when Medicare comes in and takes a look at the log. One more break. Okay. So before I dive into some of the changing regulations, I want to touch on just one other potential Medicare bad debt revenue gap that can be created when Medicare bad debt logs are put together for cost reporting. So there's a couple of ways that Medicare bad debt logs are put together. With the first being, the more traditional compilation approach. This is where, the hospital either internally or through a vendor, prepares their log. They use historical reports and historical methodologies and kind of this consistent same thing as last year approach. It works, but often in this approach, it does have the potential of leaving value on the table because it doesn't really lend itself to quickly and easily responding to those connectivity gaps. So again, we do that kind of consistent same thing as last year. We have the same reports that we download each year. They're programmed, the same way each year. That can create this whole, you don't know what you don't know kind of saga. So there can be some potential being left on the table with this kind of traditional, if you will, compilation. The other solution we see less often, but we do see it. These are clients who have bought, a SaaS or a software type of product to help them prepare their bad debt logs. Again, this is a unique kind of outside-in approach that reconciles the entire portfolio of, Medicare deductible and coinsurance, and can have the ability to consider impacts of dynamic changes. But the hospital or provider really is required to have staff available to use that software in the compilation of your logs. So while the technology is there, it requires really the provider to become that regulatory expert. And again, staff have to be available and trained to effectively use that software tool on their own. And, anecdotally, we've seen some pretty decent large compliance issues come up with these software only solutions. Again, if they're not used consistently. For instance, one of our bigger clients had a crossover issue where the software was just programmed wrong, and it was just a staff training issue. But what was happening was crossovers were getting claimed on their bad debt logs when they were billed. And not when they were being written off. And so thankfully, it was probably about $1 million, $1.5 million hit to them. Thankfully, we came in, we caught it prior to those logs being audited. We were able to amend the log and secure that value. Because again, it was good value. They were crossovers. They were just being written off in the incorrect year. And it all came down to just the way that software was configured. And again, it was just relying on staff that has a lot of other items, on their to-do list every day. All right. So I'd like to spend the balance of our time today really on these regulatory updates and how we've seen these play out nationally. I will tell you from here on out, the slides are pretty busy. I needed to put a lot of wording in these slides because this can be a meaty topic. And it can be hard to explain. And I just think it's super important to have some good wording down so that when you all look at these slides later, you'll remember what I'm talking about. But my hope is that really you can use this information, as a benchmark as you assess any one of these areas relating to your own Medicare bad debt processes. So we've seen these regulatory changes play out on different levels. I mean, the first and foremost, these CMS final rules that are issued each fiscal year, they're really the primary driver of regulatory change at the national level. And that federal fiscal year 21 final rule was really a big one relating to Medicare bad debt. And it did a really good job of codifying many historical quote unquote gray areas relating to Medicare bad debt. It affected all areas of the bad debt law: crossovers, indigent, self-pay accounts, all of them were affected. So we'll talk about these codifications in the coming slides, definitely in detail. And then for fiscal year 22 through the fiscal year 24 final rules, really less to no Medicare bad debt updates, which was kind of a nice break as we were all trying to figure out these fiscal year 21 final rules. But the main update was that new Medicare bad debt template that I talked about before. And that is in effect now. It's for cost reports 9/30 of 23 and forward. So if any of you all are a 9/30/23 year end, your cost report was due yesterday, you're probably not on the call, you're probably taking the day off. I hope you are. But if you are, you would have done that new template. You would have submitted your log with that new template. So in addition to the final rules, though, we've also seen varying retroactive and sometimes modified implementation of these directives by the fiscal intermediaries or MACs across the country. We've seen MACs applying new rules to historical years or applying uncodified rules by region. I do think the fiscal year 21 rule has helped standardize the audit some, but we are still seeing inconsistent application in some areas to be aware of. And I think it's super important to be an advocate, when you're dealing with these audits and these cost report auditors, to make sure they're not going rogue on some of this stuff. I've put a few examples down here. I'm going to talk a lot about most of these examples, but I'll give you one example of just an area that we haven't seen it in the last couple of years, but it came up a few years ago where, we had a MAC that had decided that all agency accounts had to be at a zero balance in the patient accounting system. And, for Meditech in particular, but a lot of patient accounting systems, on the way that our clients handled their bad debt accounts is once an account went into bad debt, it was gone. It was in bad debt, and it never got necessarily written down to zero. The accounts were claimed when they came back from agency appropriately, which is within regulations. But the accounts didn't get zero balanced off, and that was mainly because of a patient accounting system just issue. That's the way that it was handled. And so we had an auditor come in and try to, deny all those because they weren't at zero balance, which again, we were able to really go back, walk through the regulations, speak to how the patient accounting system worked. It was a lot of back and forth. And again, this is just an example of some of this whole gray area and these auditors kind of acting sometimes, on their own regard in some of this stuff. Most of the time, I feel like the audits have been, have been pretty, stick pretty much to the regulations, but there are times where I do feel like we've had to go back. And I tell that so that you all just maintain awareness of that and to make sure that you're an advocate for your hospital during these audits. So let's start with crossovers, as they've been a hot topic for the past few years. For a quick refresher, crossovers in general are accounts with Medicare primary and Medicaid secondary that has a secondary Medicaid remit. So with that final rule, Medicare did codify, and I'm sure you know this, it's been around for the last couple of years, but crossovers may not be written off to a contractual allowance. They have to be written off to an expense account for all uncollectible accounts. So all Medicare bad debts need to be adjusted off to an expense account. Candidly, incorporating this change has been a pain point for a lot of our clients. It's been out there for a couple of years, so hopefully most hospitals have been able to adapt to this change. And then in addition, excuse me, Medicare does have a must-bill policy when it comes to crossovers. However, with that final rule, they did clarify that they would consider crossovers without that Medicaid remittance advice if the following information, and it's stated there on the slide, is produced during audit. Again, it has to be produced during audit. You have to have that state Medicaid notification indicating no obligation to pay. Sometimes that's in the form of like the website. When you go onto that, the IDPH, well, it's IDPH up here, but you go on the state website and get that notification. You have to have documentation supporting their liability or lack thereof for that D&C amount for Medicare. And then you have to show that that patient was eligible for Medicaid during the data service. And then finally, for each of the categories that I will talk about today, I did include a section just for best practice recommendations based on kind of what we've encountered across the country with our clients and in the various audits we've been a part of. So for crossovers, the hospital should retain valid supporting Medicare remittance advices and Medicaid remittance advices, or that alternative documentation that's I spoke about above. The account balance should be reduced to 0 when a valid Medicaid remittance advice is received using a write-off code that is mapped appropriately to the financial statements as a reduction in net patient revenue. So again, making sure that whatever code you're using for crossovers is mapped on your general ledger to a bad debt expense account. And it's also very important to make sure that you're writing off those accounts, you're adjusting those accounts down to 0 after that valid Medicaid remittance advice is received. We've had some clients in the past where they'll bill Medicaid, they'll know that Medicaid's not going to pay because Medicare paid more. And so they go ahead and adjust those down to 0 while they're waiting on that valid Medicaid remittance advice. Illinois is notorious for this. Sometimes they have an 18-month gap in billing Medicaid versus when Medicaid pays. And so, providers want to get that, you want to get that stuff written off of their books. It is not a good idea to do that. Auditors really want to see that valid Medicaid remittance advice coming in before you write it off, because really when the account is deemed uncollectible is when you receive that valid Medicaid remittance advice. Okay, one more drink before I get into this good slide. So the next couple of slides do have a lot of wording. I'm going to actually read most of them. Basically, because clarifying the different terms relating to indigency and Medicare bad debt, it's quite frankly confusing. It can get really complicated. So just bear with me as I work through this information, but I really do think this discussion is an important one. So the final rule created many questions, and we've had many discussions with our providers across the country as it pertains to, quote unquote, charity, indigent, presumptive charity. These discussions have really often centered around clarifying a few key terms and then how you as providers are utilizing these terms in your daily operations, and then specifically how you organize reporting for Medicare bad debt and, S10 uncompensated care purposes. So when referring to Medicare bad debts, in the past, the terms charity, indigents, financial assistance, presumptive charity really were used interchangeably by MACs, providers, CMS, everybody in the healthcare field. Medicare has really historically allowed providers to claim charity and indigent accounts on the Medicare bad debt log, as long as those written internal, financial assistance type of policies are filed. So CMS then came in, with this federal fiscal year 21 rule and determined that the words, charity and indigent really should not be used interchangeable related to Medicare. The provider reimbursement really specifically states now, for Medicare purposes, charity care is not reimbursable, and unpaid amounts associated with charity care are not considered as allowable bad debt. So charity, as defined in that bullet above by CMS, relates to the uncompensated charges given to uninsured patients. We often call this a self-pay discount. Now, the Medicare patient portion, or the deductible and coinsurance owed by a patient after Medicare pays, by nature of the patient being insured, cannot be considered as charity when using this definition. However, Medicare does say indigent accounts can be claimed as Medicare bad debt. So non-crossover indigent accounts are accounts that you as the provider have deemed indigent according to the hospital's financial assistance policy, and that you have retained that documentation to support the patient's determination of indigent. So in other words, you have your financial assistance policy. There are specific steps in that financial assistance policy that the patient needs to go through to be approved. You are able to produce that approved financial assistance application. any supporting documentation used, asset income type of test. I'll talk a little bit about that in a minute. Any bankruptcy documentation, deceased with no probate documentation, etc. So, as noted, due to interchangeable use of terms over a long period, this has generally been a gray area that providers need to address proactively. Again, I'm going to talk about some best practices relating to that here in a minute, but distinction of the terms across many aspects of the revenue cycle function is critical. And, anecdotally, we have had a lot of our providers reach out to us for support on being disallowed for, quote unquote, charity for being double counted on S10. And if you peel back the onion and really understand what these auditors are going towards, typically providers are compliant, and these amounts on your Medicare bad debt log should not be allowed. Everything that meets, your financial assistance policy is what your Medicare indigency is claimed as a Medicare bad debt. Those should already be rolling up to line 26 on S10. If an account didn't meet the financial assistance policy, they're not claimed as Medicare bad debt, then they'll go on line 20 of your S10. And that's really what but these auditors are getting at. Line 20 is charity. Line 26 is Medicare indigent bad debt and, any other Medicare bad debt. Everybody's having the same issue because, again, Medicare kind of has allowed this whole term charity for decades in terms of how people talk about it. But really, that's what they're getting towards. You need to be we really need to separate out charity and indigency. So let's talk about the Medicare bad debt log category of financial assistance. So financial assistance best practice recommendations. Again, I talked about this a little bit before on the previous slide, but the final rule did codify a few things relating to financial assistance, which I think has actually been super helpful for providers. So traditional financial assistance is defined as financial indigency granted based on a provider's financial assistance indigency policy. So you have to have a policy, and it has to include an approved financial assistance application. And then you have to be able to provide the supporting documentation that you used to approve this patient as financial assistance. And that all has to be outlined in your policy, and you need your policy to follow the regulatory requirements. So what are the regulatory requirements? Regulatory requirements really are as follows. You must perform both an asset and an income test in determining indigency. You may consider extenuating circumstances affecting indigency, which may include analysis of liabilities and expenses. This was a really good clarification in the final rule because auditors across the country were applying this this word. They used to not have the word may. And so there were auditors across the country that were requiring hospitals to perform an asset income and expense liability test. And CMS came in and said, no. If you do an asset and an income test and that patient qualifies for your financial assistance policy, then, it's overkill to do liabilities and expenses. However, you may look at liabilities and expenses if that patient is just right on the cusp of your financial assistance policies with your asset and income. So I think that was a really good clarification for them. They also came in and said you must not use the beneficiary's own declaration of indigency as sole proof of indigency. So in other words, you can't just use a letter from them saying that they're indigent. You have to get that additional support that is required, which again has to be an asset and an income test. And then you also must determine no other legally responsible party. So you have to show that you've made sure that they don't have any sort of other insurance. So our recommendations would be hospitals utilize one transaction code for true financial assistance. Make that a different code than you use for your traditional, charity, like your self-pay type of discounts. And again, you use that financial assistance when an approved application and the proper documentation is on file. The categories on your log should be labeled as either indigent or we recommend just financial assistance. They should not be labeled as charity because by CMS's definition, these aren't charity, these are indigent accounts. If your policies require more than the CMS Medicare requirements, we recommend adjusting to avoid disallowances or questions during audit. The auditors are going to look at your policy and they're going to hold you to your policy, even if your policy requires more stringent documentation than CMS requires. So for instance, If your policy states that you have to do an asset, income, liability, and expense test, then the auditor is potentially going to hold you to that. Additionally, Medicare and non-Medicare have to be treated the same. That's been the case, for years, but it's super important to make sure that that is outlined in your financial assistance policies, or at least if it's not stated in your policies, and nothing in your policy, warrants them being treated differently. And then CMS did clarify through sub-regulatory guidance that providers must not use presumptive eligibility tools to determine whether a beneficiary is indigent. I'm going to talk about that in a couple more slides, so I'll just leave that be for a minute. I do want to just spend a couple seconds talking about the other smaller, indigency type of categories, being bankruptcy and decease. This is definitely usually a smaller area of Medicare bad debt, but it is an area of pickup for our clients. So best practice for bankruptcy would be to retain that proof of discharge from debtor, along with the chapter number, case number, and the file date. Again, you've got to produce that during audit. And it's really important to transcribe that you've got that discharge of debtor, and you confirm that again before the account was written off. They want to show that you had proof that the account was uncollectible and or really met your financial assistance policy prior to write-off. Best practice for deceased no estates is to retain proof of that no probate. Often that's a letter from the county, or you print off, you do a probate search on the internet, depending on the county, and that will be proof as well. Again, it needs to be producible during audit, and you really need to show that you did that proof of no probate prior to that account balance being written off. Okay, so let's talk a little bit about presumptive charity. Again, I said basically CMS came out and said providers cannot use presumptive eligibility tools to evaluate whether a Medicare beneficiary is indigent. So those cannot go on your Medicare bad debt logs as indigent. They do have the potential to be removed during audit. So to avoid unnecessary audit adjustments in this area, and to make sure that we preserve that population for potential Medicare bad debt if appropriate, we recommend determining presumptive indigence after reasonable collection efforts have been made. So in this model, you do your whole reasonable 120-day kind of early out or self-pay efforts. You do those, and then you determine indigence before pursuing additional collections at a collection agency. We like to call this a pre-agency scoring process. So it's kind of a business decision that hospitals make. They do their internal self-pay collections, which meets Medicare, self-pay guidelines. And then there's a business decision made prior to agency in a pre-agency scoring process that if those patients, would have, met the presumptive charity, guidelines, they're not going to go on to additional collections at a collection agency. So when reasonable collection efforts have been made, we are able to categorize these accounts on Medicare bad debt as regular self-pay accounts because they do meet valid collection efforts. And then we remove any reference to presumptive indigent because it's not relevant to the account. We are not claiming that account as indigent on the Medicare bad debt log. We're claiming that account as a regular self-pay account that has met the self-pay regulations for Medicare, which we'll talk about in a minute. Again, same thing, Medicare and non-Medicare accounts have to be treated the same in the above scenario. So you cannot do presumptive scoring for non-Medicare patients, at day 30, but wait for Medicare patients till day 120. Medicare and non-Medicare accounts must be treated the same. And then further, and likely a necessary change, at least it has been for our clients, these kind of pre-agency scoring accounts really should have their own code. We like them to be called literally pre-agency adjustment, if you will, or pre-agency scoring. And that will help to clearly define the account as regular. And any reference to the word presumptive eligibility should be removed to avoid auditor confusion, because again, we're not claiming these accounts as indigent. Great, moving right along. Self-pay. So Medicare bad debt is allowable for non-indigent beneficiaries, again, really only to the extent the provider complies with reasonable collection efforts. There was a couple things that came out relating to this in the inpatient final rule. One of the, in my opinion, the best things that came out is they really codified, this whole timely billing issue. Prior, the final rule, just prior to the regulations, just stated that a guarantor bill needed to be issued timely, and that's all it stated. So it was really up to the auditor's discretion on how they defined what timely was. Some auditors didn't check it at all. Some auditors used 90 days, some auditors used 150 days. It just completely varied. So Medicare came out and said, guarantor bill must be issued on or before 120 days after the latter of the following. So after the Medicare RA date, or if the patient had a secondary payer, after the secondary payer date, or if there was a date of notification that the secondary payer services are not covered. Now, there is, on the new template, there is a section for comments, and we suggest using the section for comments to address any potential opportunities for timely billing issues on accounts that you might have in this kind of non-indigent category. So for instance, when we're putting the logs together for our clients now, we're taking a look at timely billing. And if we have accounts that, technically do not meet that criteria. So for instance, the guarantor bill was issued more than 120 days after that Medicare, payment date, and there was no secondary payer on there. If you're able to provide appropriate comments as to why that guarantor bill wasn't issued, it can't be because of a system limitation. That does not work. But things like the patient was trying to apply for financial assistance, or we were trying to work with Medicaid eligibility folks to get them qualified for Medicaid, or we were really having a hard time with their secondary payer and we were trying to figure out how to bill them. If you have valid reasons and you can show that support, we've had no problem with timely billing on those kind of things. But it is the first thing that the auditors are looking at now when they do the logs, because quite frankly, it's easy to calculate. It's easy to calculate now. And then reasonable collection efforts must start a new 120-day collection cycle each time a payment is received. So even if that patient makes a $5 payment, that new 120-day cycle needs to restart. And that goes for your agency as well. So if you have, let's say you have a 180-day agency hold period, and that patient makes a payment, at day 170, and the agency sends it back, that is not going to qualify for Medicare bad debt because it doesn't meet the 120-day collection cycle. So something to talk to your agencies about. CMS did also say that email and text messages are acceptable collection efforts as long as they're auditable and verifiable. And again, I've said it in the last 3 slides, but you have to put forth the same effort to collect Medicare amounts as you do in your regular, self-pay population, which includes collection agency use. So you cannot have in your policy where you're not sending Medicare patients onto secondary, but all non-Medicare patients go on to secondary. That will not work, and it will get thrown out in audit, and auditors are starting to look at that area much more closely. And then documentation that you need to have available. You need to have your current bad debt collection policy that covers both Medicare and non-Medicare patients. They're going to ask you for account history. They're going to ask you for the collection efforts. Sometimes they want to see a copy of a bill or two or the statement, how that goes out. And then they're going to ask you for agency information as well. If you are claiming the accounts based on agency, based on them going out to an agency, and they are going to want that support to come from the agency. So oftentimes we'll get a big file from our agency, and then we'll get an email from the agency stating, yes, this is the file we gave them. And that usually is sufficient in an audit. So best practice recommendations relating to these 2 categories. You've got your kind of regular self-pay category. Those are your self-pay balances that have been through internal collections. And based on your policy, they don't meet criteria to send to an outside collection agency. So these are just your regular self-pay that got written off prior to going to that outside collection agency. But again, they meet that minimum 120-day collection cycle. And then agency or self-pay balances that have been through your internal collections, been sent to an outside collection agency, and have returned from the agency as uncollectible. So for both of these categories, best practice really is to reduce the account balance down to 0 when the account is deemed uncollectible after that reasonable collection efforts have occurred, which is 3 collection attempts spanning over 120 days from that first bill to the patient. And again, with collection efforts restarting after every payment. Medicare and non-Medicare accounts have to be treated the same, And then that account, that transaction code that you're using to write that account balance down to zero, should be mapped to the general ledger in some sort of an expense account. We recommend, some of our clients use a transaction code called terminal bad debt or uncollectible. And again, from an accounting perspective, all of those accounts are already off your regular AR, right? But we still recommend writing them down to zero on your bad debt ATB using, some sort of a, expense account, like a terminal bad debt sort of code. All right, another busy slide. But I want to wrap up this portion of our discussion and just talk about some audit observations that we're keeping our pulse on. And really, I just thought it would be impertinent for you all to consider as well. I've talked about this before, but there are new Medicare bad debt submission templates now in effect for 9/30/23 fiscal years and forward. It does include the standard fields that, we really always seen on a Medicare bad debt log, but, they're asking now for things like third party and patient payments, which they haven't asked for before. They want to know if and when the account went from active AR onto bad debt AR, which this date can be a little problematic to pull depending on your reporting environment. They're also asking for a field now called beneficiary responsibility amount, which will vary based on category. So again, these logs are in effect for 9/30/23 and forward. And I know our discussion really is Medicare bad debt today, but there are updates to the S10 template that you should be aware of as well. So relating to audit observations, I feel like I've talked ad nauseum about indigent versus charity versus presumptive charity, but it's just really important to remove any reference to charity or presumptive from your Medicare accounts and from your Medicare bad debt logs. Your transaction codes really need to reference financial assistance or indigent, which is what, and those are patients qualifying under, your hospital's financial assistance policies. And then for accounts that you're qualifying as regular, that are just doing the regular collections and not going on to further bad debt, those codes should reference, some sort of pre-agency scoring type of code for those as well. Again, I just talked about this, but first bill within 120 days of Medicare payment. From our perspective, this is the first thing that the auditors are looking at. They're not doing this based on sampling. They're just cutting them off at the very beginning. So they're coming and saying, hey, these 100 accounts don't meet, the timely billing requirement. You have a week to respond. And so then you need to go back, you need to look at those 100 accounts, you need to provide a comment as to why they didn't, and if it was appropriate, why they didn't meet the 120-day timely billing requirement. That takes time. And so again, our recommendation really would be try to get out in front of that and use that comment field on the new template. That's your friend. Use that comment field really to fill that stuff in proactively so that you don't get those auditor questions in the beginning. They're not extrapolating on timely billing, but it is the first thing they're looking at. And then crossovers and agency written off timely. I bring this up. We haven't seen this a lot in audit, but we've anecdotally heard that there are some auditors disallowing agency and crossover accounts that are not being written off, quote unquote, timely after the Medicaid payment for crossovers. Or after the agency return for agency accounts. That's really not in the regulations. It is being applied inconsistently, if at all. Like I said, we haven't seen it with a lot of our audits, but we've heard it's out there. We feel that is an appealable issue and something that will probably be addressed, I don't know, in the courts potentially, or hopefully just, from an appeal perspective. So again, hasn't really affected us yet, but I do want to bring it up just to make sure that you all have a pulse on it just in case it comes up, because, it really isn't in the regulations anywhere, especially, relating to these crossovers when, after COVID, we're still trying to, get our feet onto the ground with COVID and trying to figure out how the crossovers make sure that the contractual is right. And then you got to think about timely write-offs and, all this kind of good stuff. So again, haven't seen it, but it's there. S10 audit and review processes versus Medicare bad debt. This is really important. It is imperative that each year the Medicare bad debt log is compared to the S10 log before those are filed. And it is super important to make sure that all of your Medicare bad debt accounts are contained on line 26 of the S10 log. The S10 logs are audited significantly earlier than Medicare bad debt logs. So it's very hard to go back and amend an S10 log after the fact. And so it's just important to get it right the first time. The auditors are starting to review the S10 log in comparison to the Medicare bad debt log. And if Medicare bad debt accounts are listed incorrectly on line 20, it's actually becoming an issue in the Medicare bad debt audit. And I think it goes without saying, but Medicare bad debt reimbursement, 65 cents on the dollar, is much more important than S10. So getting it right, getting your Medicare bad debt right, categorized correctly on the S10 log so that you can get it through Medicare audit and get that 65 cents on the dollar is super important. All right, last slide. Finish a couple minutes early. I just want to think about future planning in the Medicare bad debt space. Now that we're all Medicare bad debt experts, I just feel like there's a few things that are really important for me, you, anyone in the Medicare bad debt space to think about as we think about the future of Medicare bad debt reporting. Again, I showed you the numbers earlier on Medicare bad debt. It's a large reimbursement opportunity for hospitals. It's often underreported. And as I said, it's trending down year over year on a national scale. It's a regulatory benefit given to hospitals, and I believe that hospitals can and should take advantage of this benefit that our government offers. The left side really I've talked about a lot, but again, it bears repeating. Crossovers recorded to contractual allowance codes. Make sure that you're not doing that, and that if you are, you have a plan in place to correct that. Indigency versus charity accounts. Make sure that your policies and procedures are up to date relating to those Medicare guidelines. Make sure that your Medicare bad debt log is labeled, correctly. If you will, take out the word charity. Look at your transaction codes. Ensure that they're appropriately mapped to a bad debt expense account, and that again, ultimately, they flow through to line 26 on your S10 log if you are claiming them as Medicare bad debt. These presumptive, charity, if you will, indigent accounts. Make sure that when are you doing presumptive charity? If it is occurring prior to 120 days of collection, you cannot claim those on your Medicare bad debt log. Maybe you don't have a large, Medicare presumptive charity type of population, and maybe you make a business decision that you're going to, you're still going to do your presumptive charity prior to it 120 days. It might make a business decision to do that, but I would encourage you to make sure that you understand how much Medicare bad debt reimbursement value you're giving up, and if that's okay, from a business decision. We talked about the new compliance regulations, making sure that first bill goes out to your patients prior to 120 days, and that date resets if there's any sort of patient payments. Integrated Medicare bad debt and S10, I just talked about that, making sure you have exception reports, integration across those two logs. Do bucket cross-referencing, cross-reference your Medicare bad debt log to your S10 log, your S10 log to your Medicare bad debt log. And then finally, and super important, just making sure that you have integrated policies, procedures, and support. Again, a lot of these policies come and flow through as they should through the business office, but it's super important that regulatory and reimbursement has a seat at the table when those policies and procedures are being discussed to ensure that Medicare bad debt is being handled appropriately. So your financial assistance, your charity, your indigent, your agency policies, what are the best practices? Are we following, Medicare bad debt guidelines? And then on the right side are just some really cool areas that, we're kind of keeping a pulse on as well, especially in MediWit. We have a couple of really cool AI tools that we're looking into to really potentially help our clients just from an AI and a robotic process automation perspective of, how can we, all the stuff on the left can be super overwhelming. And how do we really capture, or how do we use technology to capture some of these issues in real time to make sure that we're actually getting things right first and optimize the first time through before they go on the Medicare bad debt log, so that we don't have a whole bunch of rework. And look, we're looking at ways that, can crossovers or the indigent population or presumptive and regular population, can artificial intelligence really be used to appropriately handle those from the moment they drop into that self-pay cycle through the time that they filter through to the Medicare bad debt log. And then again, RPA, there's often a lot of work lists that come out of Medicare bad debt log, a lot of things that we can't claim on a Medicare bad debt log because things need to happen on that account. Maybe, it was written off to the wrong code, or there needs to be a rebill or something like that. And so how can we use RPA really to take those work lists, convert those into programmed corrections so that we don't have to use staff in order to do that? And then again, always super important to keep a pulse on the legal pipeline out there, what kind of alerts are going, any sort of court cases as well, as you're really, future planning for your Medicare bad debt to get your hospital maximally reimbursed as possible. So with that, I will give you back 4 minutes unless anybody has any questions. My information is right here. I assume you will all, the HFMA will send out this presentation. I'll make sure that happens so that you have my information, you have my email. If you have any questions over, this is a lot of information. Again, I talk about it all day, every day, but it's a lot of information to really take in. So as you go through the slides again, or if there's anything that comes up in your organization and you have questions on, I love having conversations or answering emails or getting on calls and talking about this stuff. So happy to do it, happy to support you all any way I can.
So if there are no questions, we can head out. But Tiffany, thank you so much. This is a lot of information and great information. And if you can get me the presentation, I will get it out to everybody who has participated.
I'll do it. I appreciate everybody's time and I hope you all have a great weekend.
Thanks, you too.
Thanks.
Bye.
Bye, everyone.